Today, it's almost impossible to find a country that doesn't have debt. For example, the United States now owes more than $38 trillion, the highest level in its history. The European Union has around $14 trillion in debt, while Japan is approaching $9 trillion. And it's not just them. Oil-rich Saudi Arabia, as well as export powerhouses like Germany and China, all carry massive amounts of debt. So naturally, one question comes to mind. If everyone is in debt, then who exactly do they owe all this money to? And that's where things start to get really interesting. Because this isn't just a story about economics, it's also a story about power, politics, war, and history. And the truth behind it is far more complicated than most people realize. Most of us think of debt as nothing more than money that has to be paid back. But in reality, modern economies are built on debt. From wars and financial crises to the rise and fall of empires, this system has been quietly operating in the background. And if you follow that chain of debt all the way to the end, you discover something surprising. The world isn't actually in debt to one country or one institution. For the most part, it's indebted to its own financial system. But that doesn't mean everyone benefits from it equally. Today, global debt has surpassed $315 trillion, nearly 3 times the size of the world's annual economic output. So how did we get here? To answer that, we have to go back about 300 years. It didn't begin with credit cards or online banking. It began with war. In 1694, England was at war with France, and the government's treasury was running out of money. So the king borrowed money from wealthy merchants. In return, he promised to repay them with interest, using future tax revenue. To manage this new system, the Bank of England was created. That moment changed financial history forever. For the first time, governments could spend money they didn't yet have, and the people lending the money received government bonds, promises that the state would repay them. That's how government bonds, which are still used today, were born. Soon after, France adopted the same model. The Dutch improved it. And after gaining independence, the United States used the same system to finance both its wars and its westward expansion. Over time, national debt stopped being seen as a sign of weakness. Instead, the easier a country could borrow money, the stronger and more trustworthy it appeared. In the past, nations fought wars to seize gold. Today, they raise money by issuing bonds. The battlefield has been replaced by the financial markets. Fast forward to today, and debt has become one of the foundations of the global financial system. The United States owes $38 trillion. Japan owes more than $9 trillion. And global debt grows by roughly another $1 trillion every 100 days. It's not just governments. Companies are in debt. Banks are in debt. Ordinary people are in debt. In fact, without even realizing it, many of us are both borrowers and lenders at the same time. So who actually owns all this debt? Let's use the United States as an example. Most of its $38 trillion debt isn't owed to foreign countries. It's owed to its own financial system. American banks, pension funds, mutual funds, insurance companies, and even the Federal Reserve hold a large share of U.S. government bonds. Yes, Japan and China own significant amounts of U.S. debt, but their share is much smaller than many people think. So in many ways, America's biggest creditor is America itself. The government issues bonds. Investors buy them. The Federal Reserve purchases them when necessary, creating new money in the process. Citizens pay taxes. Part of those tax revenues is used to pay interest back to investors, and many of those investors are retirement funds owned by American workers. In other words, the money keeps circulating within the same system. And this isn't unique to the United States. Much of the world works the same way. Countries buy each other's government bonds. Central banks hold foreign currencies as reserves. The IMF and the World Bank lend money to governments. Then those governments invest in other countries. In short, everyone is lending money to everyone else. It's almost like the entire world is playing the same game. And there's only one rule that keeps the game going. Everyone has to keep believing in the system. That's where the financial markets become so important, because they decide which countries can borrow cheaply and which ones have to pay much higher interest rates. The moment investors lose confidence, currencies lose value, interest rates rise, economies begin to struggle, sometimes even governments fall. Central banks are one of the most important parts of this entire system, because whenever they buy government bonds, they create new money. That means a large portion of the money we use today exists because of debt. So why does this system still work? Because people and investors believe governments will continue rolling over their debt. That belief is what keeps everything alive. But once that confidence starts to disappear, things change quickly. We've seen it happen in Greece, we've seen it in Argentina, and we've seen it in Sri Lanka. Interest rates surged, economies contracted, and without outside help, those systems couldn't survive. But here's what's interesting. Even after those crises, the system itself didn't really change. Old debt was simply replaced with new debt, because today, governments aren't trying to eliminate their debt. They're trying to refinance it over and over again. In other words, yesterday's debt is paid with tomorrow's debt. The truth is, most major economies never plan to pay off all of their debt, because doing so could shake the entire financial system. Just imagine this for a second. What if the United States suddenly paid off every dollar it owed? Banks, investment funds, and central banks around the world would lose one of their safest assets. That's why the real goal isn't to eliminate debt. It's to keep the system functioning, to keep confidence alive. But this system doesn't reward everyone equally. The interest generated by debt often flows toward large investors, and over time that can increase wealth inequality. So, in the end, there isn't one simple answer to the question, who does the world owe money to? Because in this system we're both borrowers and lenders. We're all different parts of the same machine. Modern economies have placed debt at the very center of how money works. And as long as people continue believing in that system, it keeps moving forward. But the moment that confidence disappears, the structure we've trusted for decades can begin to fall apart. If this video gave you a new perspective, don't forget to subscribe to the channel, because sometimes the best way to understand the present is by looking into the past. I'll see you in the next video.